guys, welcome back to another video, and in this video I will be going over and discussing the only model that you'll ever need in trading. And this is extremely simplified. It is what I've been doing in all of my videos, week in, week out, day out, in all of the trades that I've been taking. It'll be on EURNZD. It'll be a trade breakdown displaying a market maker buy model. Alright guys, the time is here. So on May 1st, it will be the opening day to my new Discord, and it is a collaboration with Day Trading Ralph and Nick Does Futures. We share the same thoughts and the same vision on price delivery, and we have simplified these concepts so you don't have to do any more digging, and we will be live trading in front of you. We will have weekly prep sessions, live back testing sessions, and we will have journaling sessions, psychology and trader development sessions, and much more. This is not going to be like your traditional Discord. Look at this as more so of a mentorship, because that is how I excelled to understand price the way I do now. I had a mentor to guide my path. And in the future, we actually plan on doing in-person boot camps as well, for more so of like a hands-on approach. And this is just the tip of the iceberg from what I've actually been providing to you guys on all of my social media platforms. So if you've been collecting value from what I've been putting out, you haven't seen anything yet. And the first 100 people that sign up on the wait list pre-May 1st, you guys get entered into a raffle. We're actually giving away 31-hour one-on-one sessions with either myself, Ralph, and Nick. If you are interested in joining the Discord and being a part of us, the link will be in the description of this video, and I look forward to pulling out a seat for you to sit down with us at the round table. Now, what do we do always when we start off our week? We are trying to build our narrative. We're trying to figure out how will price get from point A to point B, and what days will price give those volatility injections to where we should actually be in the marketplace to capitalize on our entries. So pretty much this week, we had news correlated and corresponding to Euro and Pound NZD Tuesday through Friday. So those were days that we could have pretty much been active and looking for any sort of means of any sort of executions for sell side or buy side liquidity draws. So I had my roadmap from the economic calendar. Now all I needed to do was correlate this and move it into the charts to see what opportunity I could jump on. Now looking at EURNZD and GBP/NZD on our daily charts, I want you guys to annotate this based off of what you see, and then I'm going to show my annotations as always for the next slide to see if what I have matches what you have. Now, this is nothing that you guys haven't seen before. I look for the same two things on our higher time frame charts, the daily, the weekly, or the monthly. I look for price to retrace into a higher time frame key level, and I look for SMT divergence to occur inside of that higher time frame key level. Now there's two things that you can notice here about EURNZD and GBP/NZD. You can notice the corresponding highs here and here and here and here. You see that EURNZD made the higher high and GBP/NZD made the lower high. So that's the first indication of strength out of EURNZD, and now we have the higher low in the daily internal range liquidity pool on EURNZD, and we have the lower low on GBP/NZD inside of that internal range liquidity pool. So my focus for a long position will be internal to external range liquidity on Euro compared to GBP. And you guys also may know this. My biggest preference when I'm looking for any sort of means of an execution, I don't like trading external range liquidity to internal range, because this is pretty much trying to catch a reversal based off of what the higher time frame trend is telling you, or a higher time frame order flow. When I'm trading internal to external range liquidity, I'm just playing the continuation after the proper retracement. So I'm basically lining myself more in sync with the higher time frame order flow while I'm trading internal to external range moves I'm looking to catch here on EURNZD. Now do the same thing on the hourly chart, just like how I had you guys do it on the daily. Now mark off your corresponding lows and corresponding highs and see if you could identify anything clear and inside of a means of an entry point that looks of value to you that you could take to that external range target that I was speaking about on the daily chart. So what I did here was I marked off the days of the week. We're inside of Thursday, moving into Friday, and this is the daily internal range liquidity pool on GN, and here's the daily internal range liquidity pool on EN. And you could see how on the hourly chart we made the higher low inside of that internal range liquidity pool on the daily compared to GN making the lower low. So like I said before, I'm going to prioritize longing the stronger asset compared to the weaker one, because this will have a higher likelihood of reaching that external range drawn liquidity that I marked off on the daily. So now that I know that this is going to be my priority based off of what the daily and the 1 hour are telling me, I'm just going to focus on this chart solely rather than monitoring this at the same time. So all I need to do is just look and monitor what's going on EURNZD to see if I could frame myself from a daily to a 1 hour entry, or framing a market maker buy model off of that daily key level. So taking a closer look at the hourly chart, I want you guys to kind of observe this based off of what I've showed on my previous videos on how to perfect your entries. And when you perfect your entries, you want the drawn liquidity and market structure to align itself with those external ranges. And like we have here, price creating that higher low off of that internal range liquidity pool on that daily key level. We have a long-term low resting here, and then we have a bunch of short-term lows all here that get swept by this one wick, tagging this down close candle that also swept these lows here. So this was an order block. We created an intermediate term low off of that order block. We created SMT inside of that higher time frame key level. So I knew that this was a protected low because this is the one that took out the short-term lows and created the SMT divergence. Now with more confirmation, after price created that intermediate term low, you could see what happened. We had a change in state of delivery, price closing above that down close body high, creating a high probability of the candle that took out the resting liquidity. So when price closes above that, you could use it as a reference point to go long and potentially reach into these highs. Now, if you look at this from framing an actual market maker buy model, you would utilize the intermediate term low that created the SMT inside of the daily fair value gap. This would be your low risk buy. The sweep, creating the SMT, price having the change in state of delivery, tagging the order block, that's your accumulation, and then price trading into this now hourly bullish fair value gap. That would be your reaccumulation, a short-term low to the right of the intermediate term low, confirming this. And now this trade has pretty much replicated all of the trades that I've taken before in the past, with the exact same thing, having the daily SMT or the weekly SMT, with the intermediate term perspective having the higher low if I'm longing or the lower high if I'm shorting, creating that intermediate term low or that intermediate term high. And when you replicate the same pattern like I have showed you guys in all of my other trades, whether it's on Twitter or it's on YouTube, this is the result that you'll most likely be getting. You're playing your cards right. You're basically trying to read a casino. If you could read cards in a casino, you have an edge. And if you could read price properly, then you could deliver results like this: internal to external, intermediate term, short term low, market maker buy models framing off of a higher time frame key level paired with SMT. This right here can literally be your forever model. It is the most simplistic way to view price. All you need is first two things: daily, weekly, or monthly higher time frame key level tag, and then you drop to your time frame aligned 4 hour or 1 hour, and you look for this exact setup aligned with news. And I promise you, you'll start seeing results pour in, because this is the most simplistic way to view price and anticipate a clear draw on liquidity. And these are just some other examples, and you could see price doing exactly what it did in the previous. This is the example that we just looked at. Look at this example that we just had today on the 23rd of April. Price created SMT divergence, running short-term lows, creating the intermediate term low, and then price pushes up, retraces into that order block like we had listed right here. After retracing the order block, price delivers with news directly to the highs. The same thing here. We had the higher time frame key level, the daily internal range liquidity pool. Price has short-term lows. Short-term lows get swept, creating the intermediate term low. Then price drives higher, having a shift in market structure, trading back into that breaker block, and then just delivers higher to the drawn liquidity. You could see how all of these correlate properly. You're in a bullish market, you're longing the stronger asset, and when you're in a bearish market, you're shorting the weaker one. And this is how we want to frame all of our trades, just like this. So if you go back on your charts, back test anything like this, you want to see higher time frame key level tags, and then after you see that, you want to drop to your intermediate term time frames, wait for the SMT divergence, wait for price to sweep short-term lows or run short-term highs, create an intermediate term high or intermediate term low, SMT divergence paired with that, and then you're seeking your executions after that happens. So simple, so easy, and I promise you, this will be all you'll ever need in your trading. But I hope you guys enjoyed the video, enjoyed this trade breakdown, and next week, like always, just anticipate the same thing repeating itself over and over and over again, because I promise you this, nothing about my model will change outside of what you see right here, because this is what has gotten me to the point where I'm at now, to trade freely and do whatever I want when I want. But take it easy, guys. Have a good rest of your week, and I'll see you guys in the next upload.